This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on Thursday, April 18th at 7:04 a.m. Mountain. Long weekend coming up, Good Friday. A lot of people will be taking Easter Monday off as well. Enjoy your long weekend. Connect with Harold at rarecoloreddiamonds.com. The companion to the podcast is our free weekly newsletter. You can receive it from Harold. Connect with him at rarecoloreddiamonds.com. We'll talk about diamonds right off the top after we get Harold's commentary, but first, the numbers. US dollar at 97.33, Canadian dollar 74.67, pound at 1.30, euro at 1.12, gold at 12.73, silver at 14.95, gold-silver ratio is 85, platinum at 8.90, palladium at 13.72, WTI 64.04, Brent at 71.87, nat gas at 2.51, Bitcoin US dollars 52.44.13, Bitcoin in Canadian 7,018.74, the Dow at 26,449, S&P at 2,900, Nasdaq at 7,996, TSX at 16,544. The Mueller report is being released today. According to the Drudge Report, Washington Post saying Mueller decided he could not come to a conclusion on obstruction. There will be a redacted version of the Mueller report released. We'll see how that plays out over the long weekend. Harold, give us an update, your opinion on the metals markets.
Well, it was exactly as I said was going to happen. Gold was not going to break above 1320, 1325, and the only significant number for gold on the upside is 1380. You know, there's so many analysts out there that get so excited as soon as gold starts to make any type of move, and they don't look at the fundamentals. And basically, gold cannot rally above 1380 with a strong US dollar unless something significant happened geopolitically, and that's just not happening. The one factor that we felt that could have affected gold and the US dollar was this Mueller investigation, but obviously they spent umpteen millions of dollars on this investigation, tens of millions, and nothing happened with it of any consequence. So geopolitically, I just don't see where there's any factors out there at this particular point that is going to push gold up over 1380. And until gold breaks 1380, it's just going to trade in a range. So it's a fairly substantial range. On the low side, it's 1,050 as the support in the market. On the upside, it's 1380. You know, that's $330 movement in between the lows and the highs. Now, again, unless the US dollar really takes off, which it could, especially against the Canadian dollar, which not only could break the 71 cent level, but could also go as far as 61 or 62 cents. And if the Canadian government is not going to raise interest rates, which it appears at this point they're not, I just don't see any way that the Canadian dollar is going to stay up. So I think that at this point here, we'll continue to see gold trading in a range, and until something happens where it has the potential to break over 1380, you know, don't get lulled into this. Don't let anybody convince you to get into a market prior to these numbers getting reached, because we've seen it too many times. You know, everybody gets so excited. The gold's at 1325, 1330. It's on its way to 2000. It's on its way to 15. It's not going to happen unless the US dollar weakens, and that is not happening at this particular point. So, again, we'll certainly keep you updated as to what our feelings are, but there's no way in the world that gold is going to run unless something would have happened with Trump. He would have been expelled or thrown out or whatever. That would have affected the US dollar on the downside, which could have pushed gold substantially higher, but that's off the table at this particular time. The other market, which is the exciting palladium market, has certainly backed off. Palladium hit a high of over 1,600. It's in the 1,300 range now. We said don't buy palladium at that point because the prices were just way too high, and it was a similar situation to why we recommended palladium all the way back when it was $170. Platinum was at $1,100. Palladium was at $170. the catalytic converter market is essential for both palladium and platinum. So why would the car manufacturers continue to use platinum in catalytic converters when it's selling for $1,100 an ounce when they can use palladium and accomplish the same thing at 170 or 200 or 250 or even 500 an ounce? So again, we felt the palladium at that point was a great buy, and it turned out to be actually very similar to the trade that we recommended in gold when gold in 2000 was at 250 and ultimately entered an 11-year bull market that we were on top of every single day, and it went all the way to 1900. Similar situation with palladium. It went from 170 all the way up to 1600, one of the largest moves in any market that we've ever seen. However, it left the market in a susceptible position, very similar to why we recommended palladium. Platinum was all the way down to $800 an ounce now, and palladium was double the price at 1600. Our recommendation was not to buy palladium, but was to buy platinum at 800. Now, we never recommend leveraging your positions. We never recommend taking unnecessary risk, but we felt that platinum at $800 was a phenomenal buy, and it turned out to be. Because if you would have bought it physically, just gone to your local coin shop, bought some palladium, some platinum coins or bars, you would have seen a $110 increase in about a month and a half on the price of platinum. So that we're still bullish on. We still think the platinum is going to become popular again as far as the catalytic converter market goes, and I think the platinum could get back up to 1,000, and palladium will hover in the 1,1300 range until we see something happen with the supply situation out of Russia. Russia really controls the price of platinum and palladium, even though it's also traded, and there is inventory in South Africa, but it's really Russia that plays with the price. And I do remember back in the day when palladium made this mad rush all the way up to $1,200 an ounce, and Ford was in that market with them and was overpaying for the price of palladium, and it almost bankrupt Ford Motor Company at that time. So again, we really have to watch the prices and watch what news is coming out of Russia, because that's really going to determine what the price of platinum and palladium is going to be. Meanwhile, oil has crept up a little bit, still nothing exciting, but gotten past that $50, $52 range. The ratio between gold and silver is remaining at about 85 to 1. Now, that is so out of whack that in the time when back in the late 70s, early 80s, when gold hit 850 and silver hit $50, the ratio was 16 to 1. So you can imagine a 16 to 1 ratio in gold over silver, gold 16 times more expensive than silver, and now you've got gold 85 times more expensive than silver. Something's got to break there. My feeling is that the silver market has been manipulated over the years by JP Morgan. We know that for a fact. Everybody knows that. The fact is that every time that silver got up to a higher level, it came crashing down, and that was primarily because JP Morgan was manipulating the market. And every time it came crashing down, why it came crashing down is that speculators in the futures market were getting killed in the market. When the market came down, they got hit with margin calls. They had to either add more money or liquidate their position, which pushed the price of silver even lower. And now what the situation is that JP Morgan has waltzed into the market at those times when the market was the weakest and everybody was depressed because the silver market had fallen so substantially, and JP Morgan came in and bought up all the cheap silver. Now, they've been stockpiling this silver for a decade now, and they own silver at very, very inexpensive prices. There is going to be a time within the foreseeable near future when they're going to do something with the silver, when they're going to raise the price of silver, just like they've brought the price of silver crashing down. They have the capabilities, because they control so much silver, of raising the price to levels that nobody has ever dreamed of. And the fact is that when that does happen, the price of silver could not only pass $50, but it could go substantially higher than that. And I would bet anything that that's exactly what the plan is of JP Morgan. The unfortunate thing is that this is permitted by the government and by the exchanges where metals are traded. We know that there's a plunge protection team in the stock market that under certain circumstances can slow down the decline of stocks if the stock market gets into trouble. Now it's not infallible because in 2008, when the stock market plummeted because of the mortgage crisis, the stock market, the Dow in the U.S., fell from 14,000 to 6,500. The market drop was so severe at that point that there was no way that the exchanges or the plunge protection team could have stopped that decline in the price of the Dow. However, under moderate circumstance, if negative news comes out, they have, on occasion, stopped the decline of the stock market. I think it's criminal that they should be able to do that, because what makes up the markets, whether it's the stock market or whether it's the commodity markets, is hedgers and speculators. And if the speculators in the market feel that they're not getting a fair shake, that the market is manipulated and they don't have a fair chance to win, they're going to exit the market. And if the speculators exit the marketplace, then there is no market. Because a market made of just of hedgers, there's no volatility and no volume in the market. There's nobody trading. So it's the speculators that coming into the market with their own opinion, whether the market's going to go higher or lower. If all of a sudden the government gets involved or the exchanges get involved and they start playing with the marketplace, it's an unfair advantage and the speculators will exit the market. And the best example of that happening was in 2011 when the price of gold had just hit $1,920. The price of silver had just hit $50. The markets were on fire. Gold was going to break 2,000 when all of a sudden the exchanges decide to raise the margin requirements, which are the price that they put up as a goodwill deposit in the futures market to trade gold and silver, and they raised the prices 5 days in a row. And what that did is it took all the leverage away from the speculators. It caused the speculators to have to sell out of their position because they didn't have enough margin in the market at that point, and they totally annihilated the gold and silver market. And as a result of that stupid move that the exchanges made, and the reason that they did it is because the government felt that $2,000 gold was not representative of a market in the United States, a stock market, and an economy that is improving. So they pulled out all the stops. They made the price of gold and silver decline substantially, and gold went from $1,920 all the way down to $1,050. And the price of silver came from $50 all the way down into the $15, $16, $18 range. So that's what I'm talking about. That should be illegal, and the fact that it is permitted from time to time should stop people from wanting to trade in those markets. And again, when we see a situation where a company like JP Morgan was allowed to do this, and as a result of them manipulating the markets, so many people that were in the gold and silver markets ended up losing their money. What happened was that a tremendous bull market that had made so many people so much money was just snatched out of the grasps of people and people that were trading in the market, and all of a sudden the market was destroyed. And look what has happened from 2011 to 2019 that we're in right now. In an 8-year marketplace, the price of gold and silver has basically done nothing. From a major bull market of 11 years, the biggest bull market that we have ever seen, to all of a sudden a market that just trades in a range and can't seem to get out of its own way. So it really bothers me tremendously that this happens. However, the fact that the people that run Wall Street, the people that trade, that run the exchanges, that do these type of things, they've got to get permission from somebody. It's somebody up much higher up than them that is making this decision. And again, I just think that it's god awful that this has happened to our marketplace and has taken all the credibility out of trading in this market. So that's the way I see the metals markets at this point, Randy. It's disappointing. And I'm not saying that gold and silver are not going to run again. I do believe that they will. But I think that the next run up in gold and silver is going to be a strategic move by JP Morgan, because they're holding so much silver that they own more silver than the mines probably own at this particular time.
Connect with Harold at rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast, 2 articles that are must-reads this week. 5 charts show platinum markets coming to life, saying exactly what Harold has, and that is palladium, a lot more expensive than platinum. As a result, people moving into platinum. Also, palladium supply-demand fundamentals remain robust. And we have reasons to buy gold. And there are some very strong reasons to buy gold and have it in your portfolio at all times. RareColoredDiamonds.com is Harold's website. We have auction results this week from Christie's and Sotheby's in New York City. Christie's New York Magnificent Jewels Auction, April 16th, 2019. The top lot 276. Exceptional twin stone colored diamond ring, fancy vivid blue pair modified brilliant cut diamonds of 3.06 and 2.61 carats, and these diamonds in the setting are gorgeous. The price on it, the estimate was $6 million. It went for $6,744,500. One of the other items that I wanted to mention, we talked about it on a past podcast. Remember that whimsical Art Deco enamel and gold Snow White and the Seven Dwarfs charm bracelet from 1937? They made it as a promotional piece for Snow White and the Seven Dwarfs. It was lot 129. $15,000 to $20,000 was the estimate. The price realized $118,750. Harold, the blue diamonds did well, and this Art Deco enamel piece, Snow White and the Seven Dwarfs, showed how when you have a backstory, you have a great history on a piece, it does very well.
That's absolutely exciting. I mean, to think it's going to sell for $20,000 and it sells for almost 10 times that amount is just so exciting for the auction market and for the, hard asset collectible market. Just absolutely exciting to see that happen. And we've seen those things happen before with pieces that have provenance. For example, a few years ago, Christie's, I believe it was, auctioned off some of Elizabeth Taylor's lesser known pieces, some of her brooches and amethyst earrings and necklaces that were scheduled to sell similar in price to that Disney piece, in the $15,000-$20,000 range. And the fact is that they ended up selling for $800,000 and $900,000. So again, when you get a piece that goes to auction that has provenance, that has importance, that has quality, these type of returns are possible. That's just very exciting to see. And it's not that the people at the auction house don't know what they're doing. You may say they thought it was going to sell for 15 to 20 and it sells for 150. They obviously misjudged it. But no, not at all. That is just the way that the market is. In fact, in a lot of cases, when you examine the auction results from Christie's and Sotheby's, naming just those two as examples because they're the biggest, you'll see that putting aside the $6 million and the $10 million and the $20 million diamonds, it's really the lesser price items that sell for the largest percentage gain. We've seen many examples where a diamond ring was going to sell for $50,000 and is sold for $150,000 or $200,000. Those are the type of returns that I love to see on hard assets. And again, there's a reason why investors are out there buying and spending this type of money. For somebody to buy a blue diamond ring and spend $6 million, number one, they've got to have a lot of money. But number two, they've got to know the business. And there's nobody who's going to spend 6 million or 10 or 20 or 50 million dollars, whether it's an art piece, whether it's a diamond, whether it's, a classic Ferrari, without knowing that piece and knowing what the potential is, and to be able to make a profit down the road. Now, a lot of these hard assets, you hold on to or you keep in the family for many, many years. And we've seen those situations happen in the past. For example, Shirley Temple's diamond, where her father bought her the diamond for $7,100 back in 1940. Now, yes, that is 79 years ago. However, they paid $7,100 and sold it for $25 million. That money going back into the family trust is substantial. And that's what these type of assets can do for you. Now, obviously, not everybody can go out and spend that kind of money, but there is money to be made owning high quality assets like colored diamonds. We've spoken about the Argyle mine. And the Argyle mine in Western Australia was discovered in 1986. It was one of the largest producing diamond mines in the world, producing over 30 million carats of diamonds a year. Out of 30 million carats, which are mostly low-grade industrial white diamonds that were used in diamond bits and drills and things to cut other diamonds, out of this mine discovered the most beautiful pink diamonds in existence. The Argyle mine produces 95% of the world's pink diamonds, a very small number. The diamonds from the diamond tender, which is about 55 to 60 diamonds only, will barely fill a champagne flute. That's how small this marketplace is. But it does represent 95% of all the pink diamonds mined in the world today, and that mine is going to close next year. We've been on this Argyle diamond mine, for 10 years now. We knew 10 years ago that this mine was going to close, and our clients have invested and put away Argyle pink diamonds for their future. We own an auction firm that will eventually sell these diamonds at auction for our clients. But the fact is that this mine is getting ready to close next year, and we anticipate in the next 3 to 4 years that the price of these diamonds can increase substantially. So it is one of the top recommendations that we are making at this time, while you can still get them, is to invest in Argyle pink diamonds. We think it's a locked-in winner.
Connect with Harold at rarecoloreddiamonds.com. And from New York, Christie's, let's talk about the diamonds that sold in the $50,000 to $100,000 price range. This is what Harold was mentioning. Lot 60, colored diamond ring, fancy light yellow, marquee brilliant cut diamond, 10.50 carats. The estimate $50,000, it sold for $60,000. Lot 143, a diamond ring, and this looked yellow to me. It is a pair modified brilliant shaped diamond of 5.04 carats. The estimate $20,000. It went for $32,500. Also lot 259, a colored diamond and diamond ring from Graf. Fancy vivid yellow cut cornered square step cut diamond of 3.55 carats. The estimate on that was $60,000. It went for $68,750. Lot 107, colored diamond and diamond ring, and this is a fancy yellow cut cornered rectangular modified brilliant cut diamond, 9.04 carats. The estimate $70,000. It went for $93,750. Lot 201, colored diamond and diamond ring, fancy intense yellow green cut cornered square modified brilliant cut diamond of 2.22 carats, and it had other fancy colored diamonds within as well. The estimate on it, $100,000, went for $112,500. Lot 252, colored diamond ring, fancy yellow cut cornered rectangular modified brilliant cut diamond, 12.26 carats. The estimate $100,000, went for $150,000. Also lot 240, colored diamond pendant, fancy intense yellow cushion and modified brilliant cut diamond of 35.06 carats. The estimate on it $500,000, went for $705,000. Also lot 239, a colored diamond ring, fancy intense yellow cut cornered rectangular mixed cut diamond, 37.65 carats. The estimate $600,000, went for $1,400,000. $5,000. And then finally we had lot 250, colored diamond and diamond ring, fancy pink, oval, modified, brilliant cut, 6.11 carats. The estimate, $1.2 million, went for $1,395,000. Harold, you were right again. Those $100,000 to $50,000 diamonds doing very well.
You bet. You bet. They're more and more people's price range. But again, $100,000 is still an awful lot of money. $50,000 is still an awful lot of money. And the fact is that people are investing that type of money in these type of assets and feel very comfortable doing so. So great job, Randy. Excellent auction results. And again, just very exciting to see hard assets doing well at a time when, there's still uncertainty in the markets. There's huge debt in the market, tremendous uncertainty. Again, markets are trading in a range. It's very, very difficult today to make money in any of the markets that are out there. The stock market is so volatile and so risky that most people invest in that market do not do well. And it's not for the faint of heart anymore. It's not the market back from when our parents were in the market. It's more of a trading market that is really controlled by hedge funds and mutual funds. The stock market is priced so high at this point that it really shuts out most of the middle class, because who can afford to invest in Google and Apple and Amazon and those stocks that are so high up there? So again, it's a different time. My best advice at this time is to sit tight and let the markets come to us. We don't want to prematurely jump into a market until the market tells us that it's time to get into it. I know that sounds simple, but it really isn't, and it takes a lot of patience. And I know a lot of people jumped back into the gold market at $1,325, $1,330 based on the euphoria from several analysts that felt that gold was just getting ready to take off and run back up to 2,000. And again, that just isn't possible with a strong U.S. dollar. When the U.S. dollar is strong, gold is weak. That's the relationship between gold and the U.S. dollar. The only time that will change is if there's extremely high inflation, or if there's a geopolitical situation that causes the markets to get very jittery. So again, we wait until the markets tell us it's time to get in, and we don't get in before that, because we've seen gold go all the way up to 1370 and then fall all the way back to 1,300 or 1,280, and people that bought in at the higher price were kicking themselves because they knew they shouldn't have done it.
Connect with Harold at rarecoloreddiamonds.com. Get our free newsletter, the companion to the podcast. We have auction results from Christie's, New York this week, April 16th, and Sotheby's Magnificent Jewels Auction, April 17th. A couple of results I want to talk about from that auction. There was lot 138, a fancy intense yellow diamond and diamond ring set with an emerald cut fancy intense yellow diamond weighing 8.88 carats, which is a very lucky number, 888 in the Asian community. The estimate on it, $150,000. The lot sold for $187,500. Now this is the one that really blew the doors off. Lot 63, fancy vivid yellow diamond and diamond ring set with an emerald cut fancy vivid yellow diamond weighing 5.66 carats. It was VVS1 clarity. The estimate, $125,000. It sold for $275,000. Double they were really expecting. What an outstanding number. There was one more. Lot 139, a fancy intense blue diamond and diamond ring. It sold for $2.3 million. Harold, that one lot though, doubling in price. 125 sold for 275. That's what we like to see.
You better believe it. And a really spectacular diamond. I mean, vivid yellow is the highest saturation of color and the more expensive of the yellow diamonds. So, yeah, outstanding. All those results were great, and just really, really good to see that the rare colored diamond market is alive and well and doing great at auction.
Released this week, Botswana unveiled a 20-carat, and they call it the Okavango diamond. It's a beautiful blue diamond, the largest ever to come out of Botswana. The GIA has graded the oval brilliant cut Type 2B diamond as fancy deep blue VVS2 clarity. And they said from the moment we saw the diamond, it was clear we had something very special. But it is from Botswana, a blue diamond, 20 carats. We have a picture in our free weekly newsletter of the rough and then after it was cut. Harold, I just love those type of pictures when you put them side by side. The rough looks beautiful, but then once it's polished and cut, somebody is going to get a diamond, carry on for generation after generation, and be able to pass down because it is so beautiful.
Yeah, and fancy deep blue is next to vivid, in between intense and vivid. So it's a very, very rare color. It's a very, very deep blue. And a VVS2 clarity is an extremely high clarity. So I agree. I don't know what the size of the rough was. Did they say how big the rough was?
The stone was cut from a 41.11 carat rough, which was recovered from the Arapa mine belonging to Debswana. And that was a joint venture between De Beers and the government of Botswana. So we're looking at 41.11 carats.
So 41 carats is an unbelievable size rough. And to cut down to a 20-carat diamond, so you could see, in order to get that fancy deep color, they had to cut and cut in order to get the color that they wanted. And you may say, well, how many diamonds would have come out of that 40-carat rough? More than likely just the one diamond. But again, fancy deep blue is a very, very rare color.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com, as Harold said, there is an opportunity to invest in rare pink diamonds from the Argyle mine. That mine is shutting down, so we have a window of opportunity. When 90 to 95% of the world's pink diamonds go away, then you have an aftermarket, and the prices, we believe, will do very well. At the end of today's podcast, everyone was so excited. Tiger Woods' 15th major win, 5th Masters. I have to admit, I was so fired up on Sunday seeing him win. I have a different perspective. Some people work at McDonald's in high school or Burger King or wherever. I was so lucky. I had a job at a par 3 golf course. There were 2 9-hole courses. I cut greens, changed holes after school and on the weekends. I was so lucky. And I have a love for golf. Probably working on the course more than playing it. I just love golf, and it was so amazing to see Tiger win. He picked up a paycheck of $2.07 million.
It was the most thrilling event. I thought the Patriots winning, coming back from 28-3 to beat Atlanta in the Super Bowl was exciting, and it was. But Tiger has always been my favorite, and watched every second of that match, as did so many people throughout the world. Just the biggest congratulations to a guy that went through tremendous embarrassment when the cheating scandal happened, when he got hurt and he had 4 back operations and 3 knee operations and felt he could never, ever swing a golf club again. And all of us that have suffered through back pain, at some point in our life certainly understand what he was going through. But this guy never, ever gave up. He never gave up. He continued to work. He continued to practice. He continued to get better. And look what the result is. He's the #1 athlete in the world. This was the most watched sporting event ever, I believe. And the results were what everybody wanted to see. Tiger Woods back on top. Tiger Woods winning his 5th green jacket. Tiger Woods has changed a lot over the last several years since all this has happened to him. To become a much more friendly and nicer person. He never used to acknowledge the crowd. Now he slaps them 5. It was just so thrilling to see him accomplish this with everything that has happened in his life. And if this isn't motivating for all of us that have had downturns in our life, all of us go through hardships. nobody's life is smooth as silk. Everybody goes through something, whether it's health or business or marriage or changes or whatever it is. But the fact is that when you see somebody else accomplish what Tiger has accomplished with everything that was against him, I think just motivates all of us to get out there and to do better and to say, yeah, the odds are stacked against me and maybe I've had a rough draw or something like that. But if he can do it, I can do it. And again, I've gained tremendous motivation from watching Tiger do what he's done. And again, just was one of the greatest events of our lifetime to see somebody who has changed the game of golf as much as Tiger has, to go through the hardships that he's gone through and find the intestinal fortitude within himself to come through to the top of the world again. I'm so proud of him, so excited to see this happen. And one of the most heartwarming things about the entire event was the fact that his children got to know who their dad really was. They didn't know him in his heyday when he was winning 25 or 30% of the tournaments that he entered, when he was the greatest golfer of all time and everybody was in awe. His kids never knew that. They heard the stories, but they never saw it in person. And for him to hug his daughter and his son at the end of that tournament, and his mom, who has gone through all this with him, was so heartwarming and so phenomenal. Again, in this day and age, to see something so pure and wonderful just did all our hearts good. And all is well in the sports world when Tiger Woods won the his 15th Masters. Again, it was just a phenomenal accomplishment from somebody who was down and out.
Without a doubt, Harold, and Donald Trump is going to award Tiger the Presidential Medal of Freedom. He mentioned in a tweet that he has turned his life around, and obviously he was wondering, would he ever play again and at what level? And here he is winning the Masters, won a tournament last year. Who knows what the rest of his career will bring, but it looks like he's got the eye of the Tiger back. Also, Waylon and Willie saying, mamas, don't let your babies grow up to be cowboys. Make them grow up to be quarterbacks. Russell Wilson, Seattle Seahawks, 4-year, $140 million contract, $65 million signing bonus, going to be guaranteed at around $100 million. He's at $35 million a year. Aaron Rodgers of the Packers, $33.5 million. Patrick Mahomes, he's going to get a new contract here eventually, and who knows how much money he's going to be making. But Harold, quarterback seems to be, even in the Canadian Football League, the CFL, we have our quarterbacks making big money now for a Canadian league, anywhere from $500,000 to $700,000, $800,000 a year. And now we're seeing in the NFL some monster money. It is big, big dough.
It certainly is. However, my team is the New England Patriots, and Tom Brady is the greatest quarterback to ever play the game and possibly the greatest player to ever play the game. And where all of these guys, these quarterbacks, are making $35 million a year, and Brady's backup quarterback signed for $30 million a year with San Francisco, Brady is getting paid at $17 million because he signs team-friendly deals that helps the team stay in business, basically, and be able to go out and get players that will help the team win. Now, the Patriots have won 6 out of 9 Super Bowls. They've been to 9 Super Bowls in Brady's 18 years. 50% of the time he has taken his team to the Super Bowl. He's going to be 42 years old, but he continues to take less money than any other quarterback. And what is the result of that is that he's on a winning team and is the winningest quarterback of all time. So there's no way that I would ever stand in the way or say anything to anybody. Everybody is entitled to get as much, for their talents as they possibly can. But that restricts the amount of money that the team has to put together a stronger team. And consequently, where the quarterback is taking 15 or 20% of the entire payroll, it doesn't allow the team to put together, a Super Bowl contention team in a lot of cases. So again, congratulations to all the guys that are making huge money. The NFL is the most exciting game in town at this time. And again, to see Russell Wilson get paid that type of money. Can you imagine signing a contract like that and then them writing you a check for $65 million that you're putting into the bank. Just an unbelievable thing. So between baseball and football and Tiger getting paid $2 million, but the $2 million the Tiger made for winning the Masters is nothing compared to the contract he just signed with Nike of England, £145 million contract for Tiger. That's what's happening in the sports world today.
One thing I wanted to mention about Tiger, and this was from Michael Wilbon of Pardon the Interruption, PTI, with Tony Kornheiser as well. You see it on ESPN in the States, TSN in Canada. He said Tiger is up there now with the icons, Muhammad Ali and Michael Jordan. And now you add in Tiger Woods, and I agree with that 100%. Harold, thank you for another great podcast. Wish everyone a happy Easter long weekend, and thank you for your knowledge.
My pleasure. I wish everybody a very happy Easter long weekend, very happy Passover for all our Jewish friends, and I wish everybody a very profitable day.
That's it. Another edition of the World Financial Report podcast for Harold Siegel. My name is Randy Marshall. We will talk to you next week.